the RBA tomorrow will meet for the first made cash rate decision. The board is likely to lift rates for the first time in over a decade. Joining me now is our business reporter, Edward Boyd. Ed, the chances of a rate hike in the middle of a campaign is now looking very likely.
Looking very likely, Laura, but there's still a chance that the Reserve Bank may decide to keep interest rates on hold tomorrow at the record low of 0.1%. So out of the big four bank economists, 3 out of the big 4 are expecting interest rates to go up tomorrow, anywhere from 10 basis points to 40 basis points. So the cash rate tomorrow could finish the day at 0.5%. Commonwealth Bank, though, still expect the Reserve Bank to keep rates on hold tomorrow and lift them in the month of June. Because the big question here is the election campaign. The Reserve Bank doesn't want to look like it's interfering at all with the election campaign. That may be one of the reasons why they decide to keep rates on hold. But if you look at where the economy's at, if you see those inflation numbers from last week, headline inflation at 5.1%, underlying inflation at 3.7%, and that's the figure the Reserve Bank really watches. They want that between 2% and 3%. It's at 3.7. It's much higher than what the Reserve Bank anticipated and any economic forecaster anticipated for that matter. So there's a lot of pressure on the RBA right now to lift interest rates tomorrow. The board meets tomorrow. They're going to have their meeting throughout the day and the decision's going to be at 2:30 Eastern time tomorrow afternoon. Probably the most highly anticipated cash rate decision in years. The last time they raised the cash rate was in November 2010. So that is a long time ago. Back then, cash rate was almost at 5%. Today, it's at 0.1%, and it is going to be going up very soon, Laura.
Yeah, certainly, multiple times as well. The share market has just opened. How did it look at the open?
Laura, the market's down. We're expecting it to fall 1.3% today, so quite a sharp fall for the ASX 200. At the moment, it's down about 1.1%, and that's because over in the US over the weekend, the Nasdaq, that's technology stocks in America, they fell about 4%. There was a big sell-off over there. So there's been a big sell-off of tech shares in Australia as well. And what I think we're going to see from the stock market today and over the next couple of days is that market falling in anticipation of interest rates in Australia rising, but also in the United States, because the US Federal Reserve, they've got their own cash rate decision, begins on the 3rd of May, finishes on the 4th of May this week. So we're going to see interest rates going up in America as well this week. That's already been locked in. We're seeing markets reacting to that already by falling in anticipation of these further cash rate hikes. So stock market's down today. Technology stocks, they're the big loser this morning. They're all down about 2% in early trade, Laura.
Ed, we can't ignore the big Airbus A350 1000 behind you. It was a little late this morning, but, you know, the aviation industry is dealing with a few things at the moment. This is pretty exciting. Qantas's balance sheet is looking a little bit better as well, isn't it?
Yeah, look, at the height of the pandemic, Qantas's net debt blew out to a bit over $6 billion, and they've just provided a little update this morning saying they've got it down to $4.5 billion. Also in the trading update today, they talk about how Qantas is expected to return to profitability in the next financial year, so financial year 2020-23. They're still expecting a very large underlying loss in this year. We'll get those results in the month of August, but there was also some good news around capacities coming back. Travellers are back. They're saying domestic capacity was at 110% over that Easter long weekend period. And international travel, that capacity is still at around 50%. So the international market's taking a bit longer to get back into gear. But Qantas are pretty positive about the outlook, and they're expecting to return to profitability in 2023. So not too far away, Laura.
Okay, yeah, it's been a rough couple of years, but certainly a lot of help from taxpayers as well. Good to see them getting back to full throttle. Ed, thanks so much. We'll check in soon.